I'm going to expose my strategy that you guys have seen me trade on Instagram that has found me success when trading the Dow Jones, all for completely free. I go over the exact strategy, timeframes, and trading plan that's completely mechanical for your success as a SMC and ICT trader. This did take me a while to make, and it only takes 1 second to hit that like and subscribe button if you guys want to see more content like this from me. Follow me on Instagram at Arkhamtrades if you guys have not already. Let's get into the first lesson. The first lesson we're going to be covering is time. Before we can get into the model and soon understanding all the intricacies of price, we have to be aware of time, when to show up to the marketplace. This is a New York session based model between the times of 9:30 a.m. to 11 a.m. Eastern Standard Time, EST. You should only enter a position between these times. If you're already in a position, you can hold until 12 p.m. Don't hold through lunch. And the reason why I put that for not holding past 12 and eventually going into PM session is because usually what the AM session does could potentially reverse during the lunch hour and PM session, right? We have the AM session and then the PM session. We're trading the New York Open, which is the AM session. Usually the PM session could reverse the AM session, so you want to ensure that you're out of your trade and you're catching that AM session expansion during that AM session and don't hold through the PM session and lunch. As you can see here in the chart, I like to divide my days at 12 a.m. EST. So 12 a.m. EST, I have my vertical line divider for Monday, Tuesday, Wednesday, Thursday, and Friday. This just makes it a lot clearer for me when I'm forming my bias because I can see the previous day from midnight open. So Monday here, we had this morning session expansion. We came up into this level and then we reversed lower. We'll talk about this a little later and how we caught it live with our students. Tuesday, same thing. We had that opening expansion. Wednesday, that expansion. Thursday, that expansion. And then Friday, we did have a move here on Friday, which we'll talk about later. Let's get into the opening range expansion. During this specific time, this is one of two opportunities that we look for inside of the marketplace. The opening range expansion is characterized as when we open up, price then immediately taps into a level of support or resistance before then leaving and creating that expansionary phase, reaching into a drawn liquidity, either in bounce or liquidity pool. So as we can see here, 9:30 we open up and we tap into this last down close candle, which is known as a bullish order block. We'll talk about that a little later. We then enter our long position here for that opening range expansion back up into these prior daily highs, and we took our trade off right here. This is one of the opportunities that we look for during this specific time. This is the opening range expansion. The second opportunity that we look for is the New York Open Judas swing. This is characterized by price before at 8:30 a.m. EST or during the opening at 9:30 a.m. EST, reaching either higher or lower into a key level, but this move higher or lower is a fake move. As price gives signatures of a reversal from this level, we can catch this opportunity in the opposing direction. The Judas swing can start as early as 8:30 a.m. EST and as late as 10:30 a.m. EST. There has to be an opposing level it's reaching into, liquidity or inefficiency, where we anticipate price cannot push past and be patient for it. So in this situation here, we have the 8:30 a.m. Judas swing. We came lower, we created this low here, looks like at this bullish order block level. We'll talk more about that later. Then we gave this push to the upside, which then took out these highs, this high and this high. These are equal highs. Price then took out these equal highs as we open up at 9:30. We had that 8:30 Judas swing. After taking out that high, we then gave this reversal pattern, which we'll talk about it a little bit later. And then we took shorts here on this bearish engulfing candlestick all the way down here, taking out this 8:30 low. Very, very solid. This is the New York session Judas swing. Let's now get down into time frames. When forming a bias, I want to start off in this order. H4, I'm looking for liquidity and inefficiencies inside of the marketplace. H1, I'm identifying the structure, looking for liquidity and inefficiencies on that higher time frame. And M15, I'm looking for my entry or lower time frame inefficiencies as well. So looking at this depiction here, we're on the 1 hour time frame. Clearly we can identify that structure inside of the marketplace is bearish. So in the overnight session, we see that we have seen this push to the upside, and coming into the New York opening, we're inside of this 1 hour bearish order block. At this level, I'm anticipating this New York open to the swing because overall structure has been bearish. We've been making lower and lower prices. We're at a higher time frame resistance level. So my bias before coming into the marketplace would be, as we reach up into this 1 hour bearish order block, I then look for lower time frame signatures to then go short at these highs all the way down here into this 830 low for that opening to the swing. So we're using the higher time frames to identify structure inside of the marketplace, as well as higher time frame inefficiencies, and then lower time frames to be even more precise inside of those higher time frame inefficiencies, as well as entry once we see our pattern. Now for entry number 1, when entering a position, I want to be on the M15 time frame. For entry models, one of my favorites is the order block, which is the last down close candle before a strong move higher. This is a bullish order block. Or the last up close candle before a strong move lower. This is the bearish order block. This can also be a rally base rally, which is a strong push up, down close candle, continuation higher. That's a bullish rally base rally, as well as strong push down, up close candle, then continuation lower. That's a bearish rally base rally. In this situation, we had this strong push down, up close candle, continuation lower. This would then be classified as our bearish order block or rally base rally to the downside. And as we can see here, we had that 1 hour bearish order block. We reached up into it during that time frame between 9:30, which we usually start trading, and then we take our short after price then taps into that bearish H1 order block and take profit down below this low. This is the bearish order block, one of my favorite entry confirmations when trading the Dow Jones. Next on the entries, for entry number 2 will be the liquidity sweep. After sweeping a old high or old low during that opening session, I want to see if we can get a rejection on that M15 time frame. As we start to break lower, I want to then go short. This can be classified as a turtle soup. Right now, we get short on the break of structure after that liquidity sweep, but with time and experience, you can eventually short the highs or lows like me, but that takes a lot of time and experience seeing the marketplace. We have here that 830 Judah swing. We came above these equal highs like we mentioned earlier. Then we gave this reversal pattern. We'll talk about that next. Then we went short here on that next candlestick after price then swept liquidity and broke structure to the downside, and we took our profits below this low. This is the liquidity sweep, a very, very good entry model that I look for. Now let's get into confirmation bias. As we then reach into our entry levels and we are anticipating a move higher or lower, I want to be patient and wait for that initial M15 candlestick to close. Using candlestick analysis, there are 2 patterns that I look for when gaining confirmation at our level. 1 is the doji candlestick, and 2 is the bearish and or bullish engulfing candlestick. On that next candle opening, after one of these 2 form, I want to then go short or long, meaning in this depiction here, we have a bullish order block at this level. Price has came down into this bullish order block, and on that first M15 candlestick, you can see here that we give this doji candlestick to the upside. So as price taps into this bullish order block, we get this doji candlestick. On that next candle opening, or as the candle opens and drops lower, I want to then go long, anticipating a reaction higher, just like so. This is how I would then use candlestick analysis as my confirmation for taking trades order blocks. So here we have a level of liquidity. We then reach up into that level of liquidity, take that liquidity pool out, and then we get this bearish engulfing candlestick. As we close here on the M15 with that bearish engulfing candlestick, on the next candle opening, or at the highs, I want to then go short inside of the marketplace, anticipating a expansion to the downside after that liquidity sweep. This is how I'd use the bullish and or bearish engulfing candlestick analysis when it comes to liquidity sweeps and gaining confirmation. So coming into the marketplace here for April 17th, we can identify these highs here on the 4-hour time frame, as well as we did have this last up close candle all the way up here, which will extend out. We can clearly identify here on the 4-hour time frame that we have been making lower and lower prices, and the overall structure of the marketplace has been going lower, which is exactly what we want to see if we're anticipating lower prices, giving us even more confirmation that as we take out this liquidity pool coming into the opening range, that I want to anticipate some type of rejection from it to then see that continuation to the downside. So coming down into the 1 hour here, we can clearly identify this as equal highs, a strong level of liquidity that the market tends to see. So we can clearly identify that we have these equal highs up here, as well as we do have these liquidity pools down here. So we can see here that we are inside of a Judas swing. At 8:30, we came down into this bullish order block, found a measurement of support at this bullish order block to then come up into these equal highs here. Now I want to see, do I get the right candlestick confirmation at these equal highs, anticipating this to be a potential liquidity sweep to then see that continuation to the downside. Coming down even more on the M15, I want to identify this bearish order block as well. So we have a level of liquidity up here, which are these equal highs, as well as we're inside of a M15 and efficiency. Very, very good signatures for anticipating some type of reversal to come into the marketplace as soon as we take out these highs. Let's see how this then plays out. We reach up higher, take out those equal highs. Let's see if we can get some type of bearish engulfing. We can see as soon as we came up into this level, price then found rejection at that level, leaving these long wicks like a doji candlestick. On that next candle opening, I want to then go short, anticipating a expansion to the downside. And just like so, the marketplace drops even lower. So as soon as the candlestick closed here at 9:45 with that doji confirmation, as soon as this opens up, we can then go short, stop loss back up here for a 2 to 1 hour at these lows. And let's see how this one plays out. And eventually price smacks TP. So we're looking at the 4 hour here on April 18th. We can clearly identify that we have highs above us, areas of liquidity above us, as well as we do have this bearish order block right above us. And we can clearly see that yesterday we did reach lower, didn't take out these lows in specific, but we did reach lower before then finding support down here to then seeing this doji candlestick higher. So we can clearly identify that the marketplace right now is seeking higher prices, and most likely it would want to reach up into these liquidity pools. Just looking at the H4 candlestick, let's go down to H1 and get a little bit more context. Coming down to the H1 candlestick, we can clearly identify this bullish order block. So boom, a strong level of support here at this H1 bullish order block, as well as we do have liquidity pools right above us. Plus we're inside of a 1 hour support level. This gives me all the reason coming into the marketplace to then anticipate long. So coming down into the marketplace here just before 9:30. So just coming into the marketplace here before 9:30, I can quickly identify this bullish order block right here, these last down close candles, which tapped into this 1 hour bullish order block. So we can clearly identify these bullish order blocks. If we can come down here into these last down close candles, find support, then I'd want to take longs back up into these highs. So let's see what happens. We open up, we get that doji confirmation candle. And as the next candle opens and pushes lower, right at the opening or lower below the opening, I want to then go long, put my stop below this low here, targeting back above these highs for a 2 to 1 hour. Let's see how it goes. And we eventually reach up into those highs, super solid. But let's say you missed that entry confirmation, right? We also had this bullish short block as well, which we can see we came lower, tapped into it, push higher. And last but not least, here we have that trading plan. You have to trade between the times given, just like we mentioned in the first slide. Take 1 to 2 trades a day. If the first trade is a loss, go down half your initial lot. This promotes you to winning that first trade and choosing the highest probability trade as that first trade. And if that first trade then loses, lower your risk and focus more so on getting back to break even or a slight profit. And if that second trade loses after the first trade, then you lost a lot less and you can focus on the next day. You want to focus on choosing the highest probability setups for that initial trade, and if it loses, lower the risk and focus on getting back to break even. Trading is a slow growth type of game. It's not always up, down, right? You want to focus on that slow and steady growth. choosing the highest probability setups, and you want to focus it on a day-by-day basis, meaning as long as you can be profitable or slightly profitable on a day-by-day basis, at least half or above 0.5%, you will do well in the long run. Stop focusing on trying to get a 1,000,000% win rate and start focusing on proper risk management and growing day by day and fixing your psychology to sticking to that trading plan on a consistent basis, and you will see growth like no other. Aim for at least 2 to 1 R and maximum 4 to 1 R with respect to price action, meaning taking profits at order blocks or old highs and old lows, not monetary gains like taking profits because you'll be up $1,000+. If you don't take profits, it's going to reverse on you, and whatever profits you see is going to turn to zero or reverse on you. Take this advice from experience. You guys want to make sure you guys are taking profit or at least taking something off as price goes in your favor, and don't hold for too long or don't try to hold based off of monetary gain. As well as if you do take profit and the Dow Jones does continue going lower or continue going higher, you guys have to be content and following that same day-by-day rule basis. Backtest daily at those specific times given and continue to improve your edge. You're forever a student of the market. You should be backtesting on a consistent basis, trying to improve your edge. I've given you the strategy, I've given you the backtesting. Now it's for you to implement it on a day-by-day basis and improve as a trader. Psychology, focus on the long term. Don't let yourself get out of control. It only takes one day to lose everything. Focus on following the plan and long-term growth, not short-term rewards. Focus on improving as a trader, improving your execution, rather than whether you won or lost that day. Thank you guys for watching. The extended version will be posted on my Patreon, plus a lot more like live trading, pre and post market analysis, weekly analysis, other models like the MMXM, order block theory, and Forex models, daily MMXM teachings / US30 analysis, psychology, journaling, backtesting, risk management plans, as well as a community of over 100+ active members. My Patreon is Traders Asylum. If you guys want to support me, there you go. I hope you guys learned a lot from this video. Make sure you guys like, subscribe, and comment what you guys want to see next. I'm Arkham. Be safe.